What's going on, everyone, and welcome back to this Elliott Wave series. Guys, if you have not checked out the previous videos, make sure you go check them out before we dive into this one. Now, this one is getting to the more advanced stuff now, but if you guys have not yet checked out the previous ones, like I said, go over to the BlackBull Markets YouTube page and look for the Elliott Wave playlist. Everything is there. We went through from all the basics to teaching you the waves, to showing the rules, the psychology even as well, and we also looked at using on the charts and trading with it as well, also with implementing our Fibonacci. Now, this is going to be the next video in that series. So like I said, if you guys have not yet checked it out, make sure to go have a look at those before we dive into this one. Now this one will be focusing on, sort of why is Elliott Wave so difficult to trade in today's market. And now we did go over as well that Elliott Wave was sort of traded back in the 1940s. So a lot of things have changed since the 1940s to where we're sitting today, which is 2021. It's a big sort of gap, and obviously the markets will have changed throughout that. So how do we adapt our Elliott Wave to today's markets? Now we see this sort of there's adaptation. We have to do this regardless whether we trade Elliott Wave or whether we trade technicals. Technicals aren't very as clear as they used to be. For example, your double tops, your double bottoms, they're not as clear anymore. They're a bit more difficult to see. So confirmations are a bit more difficult. And the same goes for Elliott Wave. So we need to sort of look for tools to use in the market. Now, like I said, it's a bit difficult. Obviously, we talked about this in our previous videos. We talked about, the more influence there is in the market, perhaps the harder it's going to start to be seeing, where we are in the market, whether if this is a correction, if it's going to be a flat, or if it's going to be that third wave we're looking for. The market will tend to look a bit more difficult. We also don't know sort of what we're looking at anymore. Is it a bit, is this a fourth wave, or is this maybe perhaps the start of wave one? Do we have an ABC sort of structure to continue down into? So it's getting a lot more difficult to look into the market. So that's why I've kind of designed this. So what we're going to be looking at today is a couple of indicators, guys, that I've actually personally set up and designed to kind of follow with Elliott Wave. There are two different sets of it. It's going to show you guys all how to set it up in this video, so definitely stay tuned, guys. But basically what we'll be looking at is a oscillator to help us find that wave 4. We're going to look for the best way to find wave 4 and obviously wave 3 as well. So this is what we've been focusing on, the oscillator. And the other ones will be a couple of moving averages, which will help us identify whether we've dipped into wave 4. When can we start to exit out of wave 4? And also it'll help us to know when can we start in wave 3? When do we enter wave 3? It's going to show us, the end of wave 2. So what we're looking at is going to have wave 1. It's going to show us kind of where we can look for to know whether we're into the wave 2. And also it's going to show us these moving averages are going to show us when we've sort of entered into wave 1, whether this is wave 1 or if it's just a correction. So these are going to be the sort of indicators we'll be using, will help us to show whether the market's ready to move into a wave 3 or whether it's kind of looking to more consolidate or consolidate or move back into the opposite direction. So that's what these indicators are going to go for. So what we're going to do now is we're going to switch over to the charts. I'll show you guys on the charts. I'll show you how to set them up, and then we can move on to how to use them. All right, let's pop over to the charts. Alright, so let's get these indicators set up. Now, if you guys do remember, we did have a couple of Elliott Wave counts, especially here, looking at the Euro USD. If you guys do remember, we had the internal wave structures. We've got waves 1, wave 2. We saw a nice extended third wave. We saw a triangle for that fourth wave, and then finishing off with that sort of ending diagonal on the fifth wave as well. So let's get out these indicators now. If you guys, like I said, we've got the two different types. We've got the oscillator, which will be pointing out our third wave and also our fourth wave, and we'll be using we've got a couple of moving averages as well that'll help us get a bit of a better entry on that third wave, and also ending from the C wave, moving on to ending from the A wave, moving on to the C wave. All right, so we're looking at catching that C wave as early as we can in that zigzag pattern. All right, so let's hop over first and put on our oscillator. So what we'll be doing is the first one we'll be putting on, we'll go over here to our indicators, or you can go over here to insert, move over to indicators as well as another option, go down to oscillators, and we'll be looking here at the MACD. Okay, the MACD, so what we'll be setting up here is we'll have a couple of settings on it. We'll be mainly focusing on Fibonacci ratios. Okay, so that's pretty much all that we'll be focused on. So obviously move over to MACD. Not sure why it's giving me the Ichimoku. Let's get on to this one over here. So we'll move over to use this oscillator. There we go, there's our MACD. So what we're going to do is parameters, and we want those Fibonacci ratios in there. So we've got the fast EMA, we've got at 5, the slow EMA we've got at 34, and the MACD SMA we've got at 5. Again, colors are just a preference. I like to have my colors blue with a solid line, and obviously the third one
sort of down here. Okay, we can maybe make it a little bit of a lighter blue to be a bit easier on the eyes, and then I like to have the red line. Doesn't really matter, colors are all your preferences. The one thing we do need to have is a zero line. So if usually you'll open it up, you'll have nothing on it. Just press the add button and you'll see a zero pop up, and I like to have mine as a black thin solid line. All right, click OK, and we can see that it's now been set up. Okay, so there's our structure. Now what this indicator does, like I said, it helps us identify that third wave moving into our fourth wave. All right, so if we do have a look over here, what we can see is we also need this one to cross over here as well. So we can see over here, third wave is the biggest wave. Or if you guys do remember, we've got waves 1, wave 2, and wave 3 moving all the way to the upside. We do see the nice big wave. We did see a bit of a crossover here on the MACD, but we didn't see our indicator line crossover, which is actually a pretty good sign, because this indicates this is, yes, a fourth wave, but it's a fourth wave of our third wave. Now we do remember that our third wave was extended, so we see that happening. Big third wave push. We see our fifth wave going over, so it did give us a bit of a hint that something's coming up as well. And the nice thing we can see here is another sort of divergence coming over, which can indicate either a big drop or a sort of retracement. Now obviously we know we're not going to be purely trading off of divergences, because that would just be silly. All right, now we see our triangle structure. We've got waves A, B, C, D, and E pushing, and we can now see that both our indicators have crossed over, moving down and finishing up on our fifth wave. And then now we've got a perfect wave count. We see, remember, waves 1, 2, 3. We've got wave 4 sideways. We had a sharp second wave sideways, a sideways fourth wave. See the market push up. That's our fifth wave. We see waves 1, waves 2, wave 3, wave 4, and 5 for that nice ending diagonal. Market finishing up on that. We can see yet again a very nice divergence play out over here. All right. So we see there's our third wave, the tip of our third wave. You can even use the end of our third wave, moving down to the last bit of our fifth wave. Big divergence, and then we saw a big drop in the market. Now this wave also shows us the start of our A wave and our C wave. Very similar structures. All right, we see our A wave pushing to the downside. We see our big block. We see a crossover where there's our B wave, right? And we see another structure coming to the downside. We cross back around, and this is our C wave. All right. Now again, we don't use this to take trades. We just use this to help us identify where in the market it is. So it's not a signal entry. This specific one is just being used to help us identify where we are. We see the similar structure again. Remember, we had a double zigzag. We had 3 to the upside. Again, we see A, nice big block, B crossing over the line, and C finishing up over there. Then we had that similar structure coming down here. Waves A, B, and C. We see a cross, right? We see a big block. We see the cross above the zone, right? There's our fourth wave. We did see a bit of a hindrance. We did have a sideways fourth wave, so that's okay. Then we saw finishing off with our C wave. Nice big block to finish it off with a bit of a divergence to give us a little bit of an extra helping hand in this market. Okay, so that's pretty much how we use this indicator. So let's add in our second bunch of indicators, the Phillips wave. Let's put those in for you guys. So again, we'll go over to our indicator list. We'll move over to trend. We'll click on moving averages, and we'll have a couple of these set up. So first one will be 34. Again, we've got the fib ratios. I like to keep these blue as well. So similar color to this oscillator. Again, these colors are just your preference. All right. We'll make sure it's on simple, and we'll have a close. And that will be our setup for our first one. So press OK. We can see our first one pop up on the chart. Again, we'll add another one. We'll go moving averages, should be at the top. If not, just go find the same way we did as the previous one. Similar settings, 34, simple. And this one, instead of having a close, we'll have it on the high. Press OK. And then we'll have the next one as well, 34, simple. But this one we'll have on the low. Okay, so we can see it kind of creates this wave structure, right? It makes sort of this kind of tunnel where the market pierces in and uses a bit of a support and resistance zone. Okay, so I'll show you guys how to use it as we get more into these videos. So let's set up the next one. So we'll set up our last two. We've got 2 more to go. I'll set up those last 2. Again, we'll go over to moving averages. And this one, what we'll have is we'll have it on the 100. I like to keep this one in black. Okay, and I'll have this one on the low, right? Press OK, and we'll have that first one set up. And again, last one we'll have set up. Again, the moving average. We'll have 100 again, simple, and this one we'll just have on the close. Now this one I like to have a little bit different to identify the two. I like to keep this one on a dotted line. So I'll just use this little dotted line over there, press OK, and you guys can see it does set it up like that. Alright, so that's kind of how we set up these indicators. Let's jump back on to the big board and we'll dive into showing you guys how we use these indicators to trade. Alright, See you there.
Alright, so now that we're back on the charts, back on the screen, let's have a look sort of at how these indicators work. Now I'll quickly run through this bottom one again, and then we'll get into combining these two and show you guys how they do work. Alright, so I'll pop this over and we can have a quick look at how this does work. Now if you guys do remember, we said about that third block being the biggest one. We want it ideal. We want this red line to cross over before you do know where our fourth wave is. We did have that fourth wave crossover over here. We had the biggest block out of all of them being our third wave. Now we do see that. We also remembered our triangle wave for our fourth wave as well, for the market to finally shoot up. Now the nice thing about this whole structure over here is this shows us sort of potentially when the best time to enter into our third wave. If you guys remember how I said that third wave, and also potentially looking to get into that C wave as well. We do know these are generally the strongest waves in the Elliott Wave market, and those are the ones we want to be trading. Now if you guys also remember, we had that low over here. So this is that low. Now obviously we do know we do have waves 1, but we didn't really know when wave 2 was going to finish, and that's how we use these lines of ours. Now what we generally see with this structure for waves 1 and waves 2, we see the 3 waves crossing. That's our first indication. So we see the 3 waves crossing, these 2 baselines over here, and then what we'll get is we'll get a movement for the market through all the structures and then pushes back down into this black zone. So this is sort of the pipeline that we have, right? It's kind of the area where the market sits on support. We see it burst through both them, crosses back both, down both. Now we've got our 2 lines at the bottom, we've got our 3 lines at the top. So we want that cross. We want to see the market go through and come back all the way and bounce on those bottom 2, what you see over here. I'll probably zoom it in for you guys so you guys can see it a bit better. Alright, so we see that nicely. So okay, so we see the cross, we see the 2, we see the 3 lines cross that zone. We see the market go well above everything. We obviously have our wave count. That was the first thing we look for, is to confirm our wave count. Waves 1, 2, 3, 4, and 5. Remember, we need to get the technicals down first before we just blindly follow any indicator. All right, that's just how it is. Okay, and then what we see is we see the market pierce back through everything, pierce into these 2 lines of ours, gets a nice rejection, and that right there is the entry point we're looking for. So we're seeing this entry point, we have an idea. Okay, we've done our fibs, we've done all the other work, right? We've seen where this market pushes down until we get our rejection on that zone. So this will be our entry point. Okay, so that's kind of a nice idea for us to enter. Now how do we use these to also manage the trades? Okay, so now that we've entered into this market, let's zoom out again. So if you guys remember, we entered down here. Now how do we know when we're finished, when the market is when we're looking to take a trade, when we're finished taking that third wave? What we wanted to see is this cross. Okay, that's what we want to see, is that cross in the market. All right, so we've taken this trade down here. We let the market run. We don't panic about any of this because we know we're still safe in the structure. We're third wave is all good to go. We continue going up. We had a bit of a panic over here, coming quite close. We see the market. So if we draw a straight line, we can see roughly around about here. When the third wave started, we can see that's fine. We still keep going. We have a sort of consolidation, but nothing crossed here up until this zone right over here. We saw a cross. See how straight I can draw this line. We saw a cross. We took the trade all the way up to here. So that's a pretty decent sized trade for a stop loss that's only down there. Okay, so now we really maximized our profit. Now, if you guys do remember what we generally would do with Elliott Wave, we take our trades and put our stop losses down below here. Now, these indicators help us squeeze that down even more. All right, so that's kind of how we use it. Let's have a look at the next structure. So you guys do remember how we use these sort of waves to identify waves A and waves B as well, and we had that here. Okay, so we had the market come down. Now, sometimes we do see that wave 4 does it for us as well. Okay, we tend to see wave 4 coming back down to the zone, right? We see it come back down and bounce back up through it, but we don't always get that. Okay, it's only sometimes, but unless we get our market movement as well, which we've already had, right? We had that back here. We can't now continue to expect another one, if that makes sense. All right, so what we saw now, we've got another type of entry here. We're getting into this wave A structure, right? And I wouldn't really be looking for this one, but what we want to see is we want to see the market reject, stay below the zone, and then push back to this. This will indicate our first A wave. I mean, you can trade it, but I mean, we do get a lot of these indications. You know, the market does a very similar thing. So I mean, we can get a lot of false entries that we don't really want to be taking. So rather, we'll try and stick trading with wave 3 and wave C. Okay, so wave 3 and wave C obviously have the similar first beginnings. All right, now we see again the market pushes through, right? We see our crosses, we see it reject, coming back out to the zone, pierces into these zones, right? And then what we see is we see our entry point, nice red candle close. If I can get that out, I'll zoom this in for you guys. So we don't lose our spot. There we go. So we see the cross, right? We see the market coming through. We see it pierce back into this black zone, into these black sort of lines, right? We see the rejection. We see the red candle close. Stop loss above that zone, entry above here, and then we take profit targets. We can now run accordingly. All right, so let's have a look at our take profit targets. So we've taken the entry there now. All right, so this was our entry. If I can find it, there it is. So we can see nice entry right back over there. Okay, this was our entry point. Stop loss over there, entry down here somewhere. Okay, and we had the market move down, nothing yet. We could potentially look at taking the trade once because we did see a very strong push in the market, right? We've also, if you guys remember how we analyzed this as well with our Fibonacci, we saw the Fibonacci ratios play out fairly nicely in this. We saw that getting roughly about the 61.8% sort of, and then what we saw as well, now we're seeing this rejection, we're seeing the cross down over here. So I mean, if anything, if you know, if it comes to worst, we could have closed maybe around here somewhere due to that. But if we did use our Fibonacci's and all the other tools, again, we're not trading purely on this indicator. We can't trade purely on indicators because they're lacking, all right? You can, but it's gonna, you know, it's really gonna affect your potential in the market. So what we want to do is we want to do our technicals first, and then we use these indicators, right? So what I would maybe look at doing, I would maybe pop over to the clean charts, analyze our Elliott Wave, then we can pop over the Phillips Wave, and then we can have a look and see sort of how we can manage our trades accordingly to that, or how we can look to potentially get better entries. So if we confirm, okay, well maybe we've now started with the wave 1, we could potentially be a wave 2. I don't know when it's going to finish. I'll pop these indicators on. We saw, you know, we saw the cross. We saw the market sort of come back down. We saw it pierce into that black line, and now we can say, okay, well I can safely sort of say that I've got my entry, and I can start moving to the downside, right? So it's not just, we're not just using these things, right, to enter. We're not just using the indicators to enter, all right? Okay, so now once we finish with our ABC, what we're looking for, right? We're looking for a move back into the upside to the direction of the market. So we've had an initial false entry right over here, because remember we had our ABC. Now this is fine because we had an Elliott Wave count. We would have made that mistake regardless whether we had the indicators or not. We thought we had a zigzag. We could potentially have seen the market go back to the upside, and now we can say, okay, well, next target is from here to up here, all right? That's when we finish our C waves, all right? Sorry, our zigzag waves, okay? And we could potentially take an entry here. Nothing happened. Then once we broke past the zone, we can say, okay, well, something's not up here, something's not right. We're sitting below this. We had a quick rush to the upside. Now we're starting to do our Elliott Wave count. And again, we're seeing this structure coming through here. This could potentially also be, I can't take you guys back on this because the data doesn't load all the way back onto the 1 hour, but this could have potentially been a similar setup to this, all right? We see it cross over here, so that could have potentially been a similar setup, but let's say we didn't catch that one, all right? Now we see the market push all the way back down again, all right? And now we get our second time. So now we see, okay, well, something else has happened here. We potentially have something else happening here. Maybe we had a 1, 2, 3, 4, and 5. Remember how we structure that? We can then see we get maybe A, B, and C. We can say, okay, cool, this is fine. Now we can see also 1, 2, 3, 4, and 5. So we know, all right, well, maybe the market's done. We saw our ABC waves. We can see the big block, right? Block number 1 for wave A. Then we see the crossovers, wave B, and we see another big block, wave C, right? So we can see that structure playing out very nicely. Then once we have a cross of the zone, and a nice, decent candle, so we potentially had another entry over here. We have 2 potential entries, 1 loss looks like it, and 1 win. Let's have a quick look. So zoom it in, see if I can make sure I don't lose it. Coming down. Alright. Let's have a look at this. Right. So we had another potential entry right over here. Okay. There was 1 entry. Stop loss over here, entry on that green candle. Okay, unfortunately we got stopped out. That's fine. That's perfectly fine. Stopped out, but we did get an entry pretty much straight away after. Again, we saw this big, beautiful green candle close on that zone. Remember, we finished our ABC. We see it coming back down. Stop loss over here, and take profit on whenever it hits this line. All right. So we traded it from here all the way to right over here, which is a pretty decent risk-reward ratio trade. If you guys can see the risk-reward, right? There's our risk, and here's our reward. All right, that's what we want. We want to see the high reward, low risk trades. Okay, high reward, low risk trades. Okay, then we see a similar structure over here. Now this one didn't pierce it, which makes it a little bit difficult sometimes to catch, but we are fine because we do know that after this ABC, we're looking for the final push to the upside. We had that wave 5, right? We had that wave 5. Market pushed up, and we did another cross. Okay. So this one's quite interesting. This one's a little bit more difficult to find. Now we don't always look to trade this one potentially because it can get a bit more difficult. But we did see the cross. We didn't quite get that retest we were looking for, okay? But what we had is we did have the struggle to the upside. We saw a nice big strong push to the downside. We saw this struggle, right? We saw the struggle. We know it's a corrective wave because corrective waves are against the trend and they tend to struggle. So we don't necessarily have to be able to count those waves. We just need to know more or less where we are in the market, okay? But once we've crossed, we've seen our blue line cross as well, our blues cross as well, but now we actually got to bounce on them, right? This is also another potential entry, another potential entry. We know we see a pretty decent block over here, so that's after the move, but we can potentially look at taking an entry as soon as both, not over here, that's a bit early because we haven't had any crosses yet, but right over here we saw a nice cross, entry over here, stop loss just above that zone, and now we can take profit either when we cross back into the zone or when we do see our next cross, which was over here. Okay, so it gives us a little bit of extra profit, entry and stop loss. All right, so that's kind of how these indicators work, right? So again, they're not 100% accurate. Okay, they help us and achieve things. That's the whole reason why we're adapting to this market. Okay, so let's quickly run through another couple of. I want to have a look at some other. See if we can see a couple more examples before we do finish this off. Okay, so we'll pop it over here, we'll run through it. We can see how Elliott Wave has played out so nicely. Remember, it's just so nice. We see that's that first wave structure we had. We can see some corrective waves we never really want to be in. Okay, let's have a look, see if we can get it. There's another first wave right over here. Okay, so remember this is our fifth wave. There's that fifth wave that we finished up on. We can see that cross over there. Here's another beautiful example. We again actually had a very nice fourth wave over here. A nice fourth wave structure. So let's have a quick look at these examples over here. Make sure I got the right one. Yes. Okay, this one was very nice. I'll zoom in a little bit more so you guys can see a bit better. Okay, again, very, very similar structure. Okay, we saw the crosses, right? We saw the crosses happening. We saw the market come back through, pierce into the zone of ours, and it closed with a nice green candle. So we saw entry. Let me actually, I'll zoom this one, pull this across a bit more so we can actually see when we have to exit this trade as well. Okay. So we saw entry right over there, right? Stop loss just below, okay? And exit. Now exit we can use once we maybe see a divergence in the third wave, or if we want to play it safe, we can say when we get this cross over here, which was right over there, which is a little bit late. The nice thing we could have done, guys, that we could have used, it still doesn't matter because it's still a very decent stop loss size, take profit / stop loss size. You see, my line's going a little bit further to the downside, but we can see it's still a very big R&R trade. If you guys look at the size of this, right? Your risk reward is still very big. Okay. Another one we could have done is potentially if we looked at once the market pierced below the zone, we could maybe look at closing there, right? Because we did see divergence, remember? We saw this divergence over here. Okay, there's our high, right? We saw divergence. So we know once we have this and we see the market pierce below the zone, we can then say, okay, well maybe I'll just take my profit, take what the market's given me, and go home with it. Okay, so that's a very nice way to find this wave. But this one played out very well. Now we can see the fourth wave actually played out very good as well. Remember, we had that cross right over the market. We still see the fourth wave coming. And then what happened is we had a touch on this zone. Now we can see it's very, very messy here. So we could have had potentially one or two entries. This one would have probably played it a bit safer. But we had this entry over here, right? We see it break through, come very close to our lines, all right? And then push further high. Now it would have been a very, very impatient, a very difficult trade to take because we had entry stop loss, a very big entry stop loss, and we had to ride it out until we finished, go past that high, or using our fibs. But we also had another entry right over here. Okay, there's another entry, right? So let's have a look at where we can potentially have taken our stops, take profits. So we move it over. Let's zoom it out a bit. Where were we? There it is. Okay, cool. So we can see that we had entry, right? We had potential entry over here, stop loss down here, or potential entry over here and stop loss down here. All right. This one not so much. It was a little bit far away. So maybe if you wanted to put your stop loss below the zone, you could have played it safe right below these two lines. But similar with this one, we probably would have put our stop loss below these two lines because it could still pierce into that zone and come back up. All right. So stop loss just below those two lines. And then again, we use a similar structure. We see the cross, right? We see the cross. That's our finish. That's probably our major wave 4. Okay. We can see that major cross. So there is our entry. There's our exit. So we can either have done it once we cross the zone or once we've seen the cross over here, which is roughly about on this. It's about on the same area. Okay. They're both roughly about on the same area. Now look at that risk reward trade, guys. Look at these risk rewards. So there's your risk. There's your risk. There's your reward. There's your reward. Okay. That's just awesome, isn't it? Okay. So it's, again, guys, we're not going to go blindly follow this. I'm not going to just take everything off. Just take everything off and look at the market and say, oh yes, okay, this thing's crossed, it's done its job. Let's take the trade now. Let's continue. This and this and this. I'm not going to be doing that. I'm going to count my Elliott Wave because this thing can still give us false signals. We see it over and over again. Okay, we need to understand our Elliott Wave count. Till we count our Elliott Wave, we don't see when we count down. We don't see any Elliott Wave structures. We don't see anything spectacular in here until we see our 5 wave structures that we've seen crossing down, crossing back below. Then we can say, okay, all right, I know where I am in the market. I had to do my job first before I can actually look at taking these trades. Okay, I'm not just going to go blindly and follow it because I know what happens after this. We get a big consolidation. We get a corrective wave until we see something significant. We obviously clearly can see. We don't even have to try A, B, and C. So go to the downside, and we can clearly see A, B, C going up. We know, all right, well, 3 waves to the downside, 3 to the up. What are we going to see? We're potentially going to see a flat. Okay, and that's what we had. 1, 2, 3, 4, and 5. Sorry. 1, 2, 3, 4, and 5. We saw that flat structure play out. Okay, no rules were broken. Okay, nothing were broken. We know that's our flat structure. Now we can start looking. Great. Okay, now that all this is played out, my Elliott Wave count is there. Now I can use these for entries. Okay, we can now see 1, 2, 3, 4, and 5. We see A, B, C come down. We have our count, guys. We see our entry, and then we ride along using these as our nice entries. Okay, so it's not a signal, right? A signal provider or a signal, whatever you want to call it. It's not just magic you pop on the chart. There's still work to be done, guys. We still have to work for what we have. It's not going to be free or anything like that. We still have to put in a bit of effort. So that's why I decided to pretty much take you guys through all the basics of Elliott Wave and everything, okay? Before we did dive onto that, guys. So I hope you guys did enjoy the series, guys. We'll be looking at doing a lot more. We see a nice into that. That was a zigzag. A lot more of these videos, guys. Not specifically on Elliott Wave, but we've got a couple of other ones we want to do. A couple of other ones we want to be looking at. But guys, that is it for the Elliott Wave series. I hope you guys did enjoy it. If you have any other questions or anything, if you have any questions about Elliott Wave or anything like that, feel free to let us know in the comments, guys. Thank you so much for watching. We really appreciate all your views and all your help. Make sure to give us a like, subscribe, guys. If you haven't seen the other videos, go check out the Elliott Wave playlist on the BlackBull Markets YouTube page, guys. And as always, from everyone here at BlackBull Markets and myself, stay tuned, trade safe.